to take up two other things which are important. One is the concept of capital budgeting, and one is the concept of uh, cost of capital. So once we do these things, now then we understand how exactly decisions are made. So remember, in the first unit, we were speaking about strategy. And in strategy, what is the basic point in strategy? The managing director of a company, he has certain choices. He has to think in which direction will he take his business, in which project will he invest, which are the activities which he should actually try to take care of. And when he does these things, he is actually using many of the points which are given here. Now, some of these appear to be repetitions. For example, opportunity cost and discounting. But we can quickly look at these just to understand exactly how this helps someone who is involved in strategy to actually make proper decisions. So we'll begin the first one, incremental concept. Now, incremental concept, well-known concept, is basically based on the concepts of marginal cost and marginal revenue. देखो मार्जिनल कॉस्ट और मार्जिनल रेवेन्यू माने नाम बड़ा है, बेसिकली ये क्या है? अगर हम आज 100 यूनिट प्रोड्यूस करते हैं, उसमें मेरा टोटल कॉस्ट आता है XYZ, कुछ भी अमाउंट मेरा एक कॉस्ट आता है. If I produce one additional unit, from 100, I go to 101. What is that extra cost which I will have to bear? कुछ तो होगा cost. There will be some cost. If I increase my production, there will have to be some cost. So think of it like this. One unit, if you are not being able to see it clearly, think of it like this. Suppose I'm already making 500 units. I decide to make 100 units more. If I make 100 units more, in 100 units को बनाने में कितना एक्स्ट्रा खर्च हो? This is the concept of marginal cost. Whatever extra cost you are bearing to produce more units is known as marginal cost. And since you have produced more units, you will sell these units. So by how much will your total revenue increase? Whatever is that increase in revenue, suppose you are selling up to 5 lakhs, because of the 100 new units you have produced, your revenue now becomes 6 lakhs, then the marginal revenue is 1 lakh, that extra bit. Is this clear, this point?
Yes, sir.
So, because see, increment matlab hota hai extra. So, what is that extra thing which happens in terms of cost and in terms of revenue? Now, so incremental cost, incremental revenue. Incremental cost denotes change in total cost. If I'm producing something extra, what is the amount I am spending on that extra bit? And if I am, incremental revenue denotes change in total revenue. What is the extra revenue from sale of the additional products? This will result in increase in additional revenue. So incremental ka matlab ye hota hai. Now, how will this help? So let us just look at this again. So incremental cost denotes change in total cost. Incremental revenue means change in total revenue. Now, the rule is any decision that you make, it will be profitable if it increases revenue more than costs. आपने प्लान किया कि 100 यूनिट और बनाया जाए. ये जो 100 यूनिट आप बना रहे हैं, इस पर खर्च होगा. And then later on you will sell this. Because of that you will get some revenue. If that extra revenue is more than the extra cost, then your decision is a good one. Obviously, because you have increased your profit. The second concept is, suppose you make a decision in which you have to change the structure of cost. आप कुछ चीजों पे खर्च कर रहे हैं, यू डिसाइड टू चेंज कि भाई इन चीजों पे कम खर्च करो, इन चीजों पे ज्यादा खर्च करो. Don't think in terms of production costs. Think in terms of other costs, like for example, selling and marketing costs. उसमें I'll give you an example here. तीसरा हो सकता है, it increases some revenues more than it decreases others. आपका डिसीजन के चलते क्या होता है कि जो आपको रेवेन्यू आ रहा था उसका पैटर्न चेंज कर जाता है. कुछ प्रोडक्ट्स पे आपके रेवेन्यूज बढ़ जाते हैं, कुछ प्रोडक्ट्स पे रेवेन्यू आपका कम हो जाता है. लेकिन जो बढ़ता है वो ज्यादा बढ़ता है, जो कम होता है वो कम होता है. सो इन व्हाट विल हैपन इज बिकॉज ऑफ दैट आपका ओवरऑल प्रॉफिट बढ़ जाएगा. सी इन ऑल दीज फोर सिनोरियोज, इन ऑल दीज फोर you will see that ultimately the profit will increase. If your revenue increases more than costs, it will lead to an increase in profit. If some costs are decreased to a greater extent than others are increased, that means total cost has gone down. Once again, the profit will increase. If some revenues are increased by more than others which go down, even then my profit has gone up. And if costs are reduced more than revenues, let's say कि दोनों चीज घट गए, हमारा प्रोडक्शन ही कम हो जाता है, कॉस्ट भी कम गया, सेल्स भी घट गया, but the costs have gone down more than the revenue, then what will happen is your profit will increase. Is this clear, this basic concept?
Yes, sir.
Hardik?
Sir. Yes, sir.
Now see, take the first one. Some businessmen hold the view that to make an overall profit, they must make a profit on every job. The result is that they refuse orders that do not cover full costs plus a provision of profit. This will lead to rejection of an order which prevents short-run profit. इसका लॉजिक you understand it like this. Suppose करो कि you want to produce 100 units of something. तो you will say कि भाई 100 units बनाने के लिए मुझे इतने raw materials चाहिए, इतने labor चाहिए, इतना selling and administrative expenses है, इतना overhead costs है, ये सब कुछ है. Now, if tomorrow you are producing 100 units, suddenly somebody comes and he says that I want 50 units. Now, according to this businessman, he will again add everything. He will say कि हाँ भाई labor में इतना लगेगा, raw material इतना लगेगा, selling administrative इतना लगेगा. But if you think about this, there is something wrong in this way of thinking. If I am already producing something and there is capacity to produce a little more, and I get an order, तो जो दूसरा जो additional हम बनाएंगे, maybe the cost of that will be less. Look at it like this. Suppose एक full batch बनाने में इतना खर्च हो रहा है. You get an order और वो बनाने के लिए labor is 3,000, raw materials 4,000, overheads 3,600, selling and administrative expenses 1,400, full cost is 12,000. आपको order मिलता है 10,000 रुपए का. आप अपना costing इस तरह से करते हैं. So you will say कि I'll end up with a loss. इस हिसाब से you are getting a loss. Now, suppose that unit, आपका जो फैक्ट्री है उसमें कुछ idle capacity, मतलब उसमें कैपेसिटी है और प्रोडक्ट्स बनाने का, उसको आप यूज नहीं कर पा रहे हो. Let's say it has a capacity to make 10,000 units. अभी आप basically 8,000 यूनिट बना रहे हो. That means a lot of the costs are already covered. आपके जो fixed costs हैं, वो सब तो खर्च already आपने कर दिया. Whether you make 8,000 units, 4,000 units, 10,000 units, that expense is going to happen. आपके labor वगैरह हैं ही वहाँ, थोड़ा सा और उनसे काम लेना पड़ेगा. So basically what will happen is, labor जो fully utilize नहीं हो रहा था, because आपका capacity ज़्यादा था, उतने orders आपको नहीं मिल रहे थे, वो थोड़ा सा बढ़ेगा, but it will not go up by the full amount. It will go up by a little bit, 2,000. In the original thought, I thought it will go up by 3. ये full cost. Raw materials का cost तो same रहेगा, that cannot change. Overhead cost, once again, full cost may be 3,600, but since I'm already bearing overhead costs, thoda sa extra lagega. You know, this is like saying you are already making food for 4 people. If one person comes and says, give me some, आप थोड़ा सा अगर एक्स्ट्रा बनाओगे, and then you will say कि उतना ही गैस का हम लेंगे एक्सपेंडिचर, उतना ही दाल का लेंगे, उतना ही चावल का लेंगे. That is not logical, ना. थोड़ा सा एक्स्ट्रा आपको लगेगा. Now in this case, everything actually selling administrative तो लगेगा ही नहीं. You are already spending money on trying to promote these goods. Now, if you are going to sell 10,000 more, and that too you already have an order from someone, there is no extra expense in selling. इसलिए ये पैसा तो खर्च होगा ही नहीं आपका. So full cost is actually just this much, 7,000, and you're getting 10,000 in return. You have ended up with a profit of 3,000. So you see, the logic in incremental is, I should be very clear about what is the incremental cost. Don't look at it in terms of full cost. ये जो है, this is like a full costing. ये वाला incremental. Then you will be able to take a decision, because देखो ये full costing basis पे तो हम reject कर देते इस order कि हमारा loss हो रहा है 2,000. But when I look at the incremental costing logic, then I can say that no, I'm making a profit of 3,000. Okay, ठीक है, let's go for it. Is this clear?
Yes, sir.
Now, let us look at that second case which we had. Second case was, it decreases some cost to a greater extent than it increases others. Now, यहाँ पर क्या हो रहा है? Suppose I am spending 1 lakh rupees on advertisements. ये खर्च है, already मैं कर रहा हूँ. Now I decide कि इसको कम कर देते हैं. लेकिन इसके बदले में I will have to do something. So I say कि चलो यार dealer commission बढ़ा लेते हैं. Dealers को I will give more commission. I will tell my dealers कि look यार, you promote my goods. Advertising में जो हम खर्च कर रहे थे उसको कम कर देते हैं. तो what I do is, advertising का खर्च मेरा होता था 1 लाख, इसको हम कम कर देते हैं by 40,000. I am now spending 60,000. ये खर्च हम करते नहीं थे, डीलर कमीशन हम देते नहीं थे. Now I am giving a commission to dealers and I say that okay, I'll give you a commission of 30,000. ये मेरा खर्च हो. That means 40,000 का कमी हो गया advertising expenses में. So some cost has been decreased, और जो additional cost आया वो उससे कम. 40,000 मैंने कम कर दिया, 30,000 उसमें से डीलर कमीशन को दे दिया. If I am successful, मेरा सेल्स नहीं घटा, मेरा सेल्स अभी भी 10 लाख है. Then at the end of the day, I have made a profit. Agreed? 10,000 से तो प्रॉफिट बढ़ जाएगा ना. This is the logic in this. It decreases some cost to a greater extent than it increases others. ये वाला cost घट गया by 40,000, ये increase किया by 30,000. Now the third one is, so the third one was, it increases some revenues to a greater extent than it decreases others. Now let us take an example like this. There is a company that is producing soaps and detergents. Now it is obviously spending money on advertising for soaps and for detergents. Or in this, it decides, let me pay more attention to advertising for my soaps. Detergent पे हम कम कर देते हैं. So what it does is, it begins to focus more on soap, और 5 लाख इसके खर्चे जो है, इसके चलते क्या होता है कि इसका सेल बढ़ जाता है by 5 lakh. Since it is now advertising more for soaps, the sales of soaps goes up by 5 lakhs. Now it has stopped it, or it has reduced the advertising for detergents. उसके सेल्स कम हो जाते हैं, लेकिन वो 5 लाख कम नहीं होते, वो 4 लाख कम होते हैं. So once again, what has happened? Total profit has increased by 1 lakh. So this example कुछ रेवेन्यू हमारे बढ़ जाते हैं, कुछ घट जाते हैं, बट द वन विच इंक्रीज्ड सोप इंक्रीज बाय 5 लाख, और जो कम हुआ वो जो है सिर्फ 1 लाख। सो द कंपनी एंड्स अप विद अ प्रॉफिट ऑफ, बराबर? ओके हार्दिक, ठीक। नाउ लुक एट दिस, सो लुक एट द सेकंड कॉन्सेप्ट, टाइम पर्सपेक्टिव। टाइम पर्सपेक्टिव में एक्चुअली क्या है कि इफ यू आर एन एमडी, यू हैव अ चॉइस ऑफ मेकिंग ईदर शॉर्ट रन डिसीजंस और long term decisions. It's up to you. If you take a short term decision, maybe it will have an impact on the company in the long term. So you have to think. So what is the impact of the short run and long term effects of decisions on revenues as well as costs? Now इसमें क्या हो सकता है? In the short term period, the firm can change its output without changing size. मतलब कि सपोज करो कि मेरा कैपेसिटी है 10,000 यूनिट एंड आई एम प्रेजेंटली प्रोड्यूसिंग 6,000, तो मेरा आउटपुट इज 6,000, कैपेसिटी इज 10,000, द साइज ऑफ माय कंपनी इज 10,000। मतलब कैपेसिटी के हिसाब से अगर हम देखें, सपोज आई टेक ऑल कंपनीज एंड आई ग्रेड देम अकॉर्डिंग टू द कैपेसिटी, तो हम बोलेंगे कि भाई ये हमारा जो साइज है ये 10,000 वाला है, ये कंपनी में एक महीने में 10,000 यूनिट बन सकता है। Now I am presently making only 6,000. So I can increase my output. Size change करने की नीड तो है नहीं। I can produce up to 10. मैं बना रहा हूँ 6, चलो मैं 8 बना लेता हूँ। So I can increase the output in the short term. इसके लिए कोई fresh investment करने की जरूरत है नहीं। तो short term में I can increase my output without trying to increase my capacity. उसकी जरूरत हमारे पास नहीं है। सिमिलरली जो पूरी इंडस्ट्री होगी शॉर्ट रन में, उसके अंदर जितने कंपनीज चल रहे हैं उस इंडस्ट्री के अंदर, सपोज करो प्लास्टिक बकेट्स का कोई इंडस्ट्री है, उसमें 5-7 इंडस्ट्रियल यूनिट्स हैं, अगर हर एक यूनिट अपना थोड़ा थोड़ा कैपेसिटी आउटपुट बढ़ा लेता है तो पूरी इंडस्ट्री के आउटपुट बढ़ जाएगी, लेकिन पूरी इंडस्ट्री की कैपेसिटी तो नहीं बढ़ रही ना। इट्स द सेम point I'm making is in the short period, short run में आप आउटपुट बढ़ा सकते हैं, आप उस अपना फुल जो ये कैपेसिटी है वो नहीं बदल सकते। That means you are limited by your capacity. जो भी आपकी कैपेसिटी है, जैसे ये कंपनी का 10,000 है यूनिट बनाने की क्षमता, वो 10,000 से ऊपर तो नहीं जा सकता ना। शॉर्ट टर्म में इट कैनॉट एक्सीड इट्स साइज, इट्स जो भी साइज का लिमिटेशन है उसके ऊपर वो नहीं जा सकेगा। बट इन द लॉन्ग पीरियड ये इन्वेस्टमेंट कर सकता है और कैपेसिटी बिल्ड कर सकता है, 10,000 से 15,000 वाला मशीन लगा सकता है। इन व्हाट विल हैपन इज इन द लॉन्ग टर्म इट कैन इंक्रीज इट्स साइज, लेकिन उसमें क्या होगा, इफ इट इज गोइंग टू इन्वेस्ट इन मशीन्स एंड इन अदर थिंग्स, शॉर्ट टर्म में ऑब्वियसली इट विल नॉट बी डूइंग टू मच। उसके जो मेन बेनिफिट्स मिलेंगे वो कब मिलेंगे, दे विल ओनली गेट इट इन द लॉन्ग टर्म। तो किसी के पास में, सीईओ के पास में चॉइस होता है कि व्हाट शुड आई डू, शुड आई गो फॉर समथिंग व्हिच इज शॉर्ट टर्म, चलो यार अभी कैपेसिटी जितना बढ़ा सकते हैं बढ़ा के चलो, इन्वेस्ट नहीं करते मशीन, लेट अस टेक द प्रॉफिट्स, इन्वेस्टमेंट नहीं करेंगे तो क्या होगा, मेरे पास कैपिटल ज्यादा होगा, उसको भाई हम प्रॉफिट के रूप में बांट लेंगे। सो दैट इज वन वे। एक एग्जांपल आप ऐसे भी दे सकते हो शॉर्ट टर्म। कैसे, एक फर्म है उसके पास थोड़ी आइडल कैपेसिटी है, एक कस्टमर आता है उसके पास और कहता है कि भाई 10,000 यूनिट मेरे लिए बना और 4 रुपए पर यूनिट मैं आपको दे दूंगा। एक्चुअली वो कंपनी इससे ज्यादा में बेचती है माल। Let's say the company is selling things at 450. So this customer comes and says कि भाई देखो 4 रुपये जो है मैं दूंगा आपको, आप 4.5 में बाजार में बेचते हो, 4 मैं दे देता हूँ, आप मुझे माल दोगे या नहीं। वो देखता है बेचारा, देखता ये है कि आई कैन एक्चुअली प्रोड्यूस दिस, इंक्रीमेंटल कॉस्ट मेरा 3 रुपीज पर यूनिट। तो देखता है शॉर्ट टर्म लॉजिक क्या है, शॉर्ट टर्म लॉजिक इज एक्सेप्ट द ऑर्डर, मेक अ प्रॉफिट, ठीक है ना। 30,000 रुपए में मेरे 10,000 यूनिट बन गए, 40,000 मुझे मिल गया, 40 minus 30, 10,000 I have earned. So short term में this appears to be a good decision. What is the problem in the long term? इसी decision का long term consequence एक होगा. Can anybody think कि क्या हो सकता है? Normally ये 4.5 रुपए में बेचती थी, नया कस्टमर आता है, वो 4 रुपए में बार्गेन करके ले जाता है. और ये मान जाती है कंपनी 4 रुपए में बेच देती है. What is the likely consequence in the long run?
Long run, sir, costing again affected.
Yes. Cost will be increases. Yes, Lokesh?
Fixed cost increases, because in long run he will invest for machines.
I didn't understand. Say again.
So, I mean to say, in long run he will invest in increasing production capacity, no, sir. So it increases the cost.
Okay, that is one way of thinking of it. There is another point here. If for a short-term benefit he reduces the price, his existing customers will also demand a lower price. See, those people who are regularly buying from him, they will say, why are you selling at 450 to us? By market में सबको सब पता लग जाता है. Everyone finds out.
Yes.
So the repercussion is it may not be able to take up business with higher profit margin in the long run, because everyone will now say कि नहीं भाई कम में बेचो. If you can sell, so the image of the firm is spoiled. देख भाई इतने दिन से ज़्यादा पैसे ले रहे थे आप. Why were you doing this? The other customers may also demand a low price. So in the long run, the company is actually going to face problems. This is the basic, this timing concept, perspective is this. Am I looking for a short-term profit, or am I trying to think in the long term and get a sustainable profit for my company? So nobody should make decisions which are based on very short-term benefits. That is the lesson out here. Opportunity cost, you all understand. There is nothing much to say except that I think that day, Lokesh, you had asked me one question, trade-off. Remember?
Yes, sir. Trade-off.
So I think let's read this. You will see how you will get your answer here also. So resources are scarce. हमारे पास में तो limited है resources, whether it is financial, human resources, anything. So we cannot produce all commodities. For the production of one commodity, we have to forego the production of another commodity. हमारे पास में choices हैं. Commodity A बनाए, B बनाए, C बनाए, D बनाए. ये resources limited. So we can either produce A and B, or C or D, or A or C. दो products हम बना सकते हैं. Now, the calculation of opportunity cost involves the measurement of sacrifice. Sacrifices may be monetary or real. The opportunity cost is termed as the cost of sacrificed alternatives. So if I choose to make product A and B, I am sacrificing C and D. मेरे पास भाई इतना ही resources हैं जो हम दो product बना सकें. 4 options है मेरे पास. I pick 2. If I pick A and B, C or D नहीं बनेगा. If I pick A and D, then B and C I can't make. So I am sacrificing 2 to make 2. This is trade-off, Lokesh.
Okay.
हाँ, यही वाला concept है trade-off का कि I have to sacrifice something to get something. Now, opportunity cost is the cost of the sacrifice of the best alternative foregone in the production of a good or service. जैसे हमने select किया A and B. दूसरा best alternative क्या था? कि I make C and D. Now I am foregoing it, I am sacrificing. ये sacrifice के चलते जो profit हम गंवा रहे हैं. See, maybe I am thinking that this will get me a higher profit. If I make A and B, I will get a better profit, better market. So I am sacrificing C and D. But C and D, अगर हम बनाते and I would have sold those goods, I would still have got some profit. That is the cost. Now, as long as your gain is more than your cost, it's fine. So by making A and B, if I'm making a profit of 2 and I'm losing a profit of 150, I'm still okay. ठीक है भाई, opportunity cost 150 का था, but I have managed to make 2. Therefore, I am fine. So the whole point in opportunity cost is whatever I am sacrificing has a cost, but my gain should be more than my cost. Clear?
Okay, sir.
Okay, sir.
So the examples, simple examples will be what? I have some limited land. I can use it for making wheat or some alternative crop. If I choose wheat, alternative crop gaya, that is the opportunity cost. Suppose you are a laborer. What is the opportunity cost for you? You could have worked here. If you are working in one firm, the cost for you is what would you have got had you worked in another firm? For both of you, suppose you change your jobs. You are working right now. Opportunity cost for you is what will you get if you leave this and take up another job? Is it more than what you are getting today? Is it less? I'm assuming it is less than what you are getting today, so you are staying in this. The moment your opportunity cost comes to a point where you are losing more than you are gaining, you will begin to think differently. Now, for the capitalist, cost of capital to the capitalist is the amount of interest he could earn elsewhere. भाई कैपिटलिस्ट पैसे लगाया कोई इन्वेस्टमेंट में, ही इज गेटिंग 10%. अपॉर्चुनिटी कॉस्ट क्या है? अगर कहीं और लगाता तो 9% मिलता, तो ही इज गेनिंग. बट अगर कहीं और लगाता 11% मिलता, देन ही इज लूजिंग. सो द अपॉर्चुनिटी कॉस्ट इज दैट अदर ऑल्टरनेटिव इन्वेस्टमेंट व्हिच ही हैज. नाउ यू कम टू द डिस्काउंटिंग पार्ट. Discounting is something which we discussed in detail the other day. I'm sure you people recall this when we were discussing present value and net present value, where we simply said that the value of a rupee receivable in the future is less than the value of a rupee in hand. मेरे पास में अगर 100 रुपए हैं और एक पोजीशन है जहां मुझे 1 साल के बाद 100 रुपए मिलेगा, तो मेरे हाथ में जो 100 रुपए है उसका वैल्यू ज्यादा है एज कंपेयर्ड विद जो मुझे बाद में मिलेगा. Now, इसमें let's take another one. So when evaluating the profitability of investments, the concept of NPV is helpful. This is another thing that we touched and we'll do again today. Net present value का concept discounting के साथ हम क्यों कर रहे हैं? Because when we arrive at present value, we are doing a discounting. You people remember this, na?
Yes, sir.
Anyway, we'll do it again today. The fourth concept here, or rather the fifth concept, is this equi-marginal concept. Now, this concept is, I have an input. मेरे पास में कोई चीज है, लेबर है, कैपिटल है, and I have choices. I can invest in different things. ये equi-marginal concept basically says that मेरा जो investment होगा, it will never be in something which is less gainful than others. इसको थोड़ा सा example के रूप में आप समझो. Let's say that a firm has 100 units of labor, उसके पास, और इसके पास में ये लेबर का काम वो कहाँ करा सकती है? It can use it to produce A, B, C, D, and E. So the firm can increase any one of these activities by employing more labor, but only at the cost, sacrifice of other activities. तो इसमें एग्जाम्पल हम ऐसे लेते हैं, सपोज करो कि मारुति रिक्रूट्स 100 engineers. ये इनपुट हो गया. This is one resource they have, 100 engineers. It is making 4 types of vehicles. Now, how should Maruti deploy these engineers? सपोज करो एक सिंपल वे में हम देखते हैं कि ये कहता है कि भाई हम 4 व्हीकल बना रहे हैं, स्विफ्ट, ऑल्टो, ए स्टार, एस क्रॉस. इसके पास 100 इंजीनियर आए नए. हाउ विल यू डिप्लॉय दीज पीपल? कहाँ लगाएंगे? तो एक कोई कहता है यार 25-25 लगा दो सब. 25 स्विफ्ट वाले फैक्ट्री में, 25 ऑल्टो में, 25 ए स्टार में और 25 एस क्रॉस। नाउ उसके बाद आफ्टर लेट्स से अ सर्टेन पीरियड, जब वन साइकिल ऑफ प्रोडक्शन इज कंप्लीट, इसके सेल्स चेक किए जाते हैं कि भाई आफ्टर द डिप्लॉयमेंट ऑफ दीज इंजीनियर्स what were the sales of these 4 vehicles, and it is found स्विफ्ट के चलते 100 crores बढ़ा प्रॉफिट, ऑल्टो के चलते भी 100 बढ़ गया, ए स्टार के चलते 25 बढ़ा, एस क्रॉस के चलते 50 बढ़ा। व्हाट विल बी द नेचुरल टेंडेंसी ऑफ द CEO? क्या करेगा?
He go with Swift and Alto.
Yes. Why will he go with Swift and Alto? Because ये दोनों losing proposition हो जाता है कि यहाँ अगर लोग लगाते हैं तो प्रॉफिट बढ़ता तो है लेकिन कम बढ़ता है। दैट इज द इक्वी मार्जिनल थिंग। अल्टीमेटली वो वहीं पे लेबर को लगाएगा जहां पर कि ये दोनों बराबर है, बिकॉज अगर ये दोनों बराबर नहीं होगा देन अगेन ही विल फील कि इट इज बेटर टू पुट द रिसोर्स इन द हाईएस्ट। तो जो हाईएस्ट कैटेगरी वाले जितने होंगे ही विल ऑलवेज ट्राई टू पुट the shift people to that which give him the highest. That is the concept of equimarginal. You will never find a situation where you are supporting or putting more resources into a losing proposition. आप सिंपल चीज लो ना, बैंक में जैसे हम लोग थे, I used to work in a bank. Now वहां सबसे scarce resource क्या होता था? Staff. Every branch manager used to cry for staff. Sir, रीजनल मैनेजर को हम लोग क्या कहते थे कि भाई और स्टाफ की कमी है, बहुत देर तक काम करना पड़ता है, बहुत परेशानी होती है और मुझे स्टाफ चाहिए। लेकिन स्टाफ मिलता किसको?
अच्छा,
एनी गेसेस लोकेश? हु वुड गेट द स्टाफ? सी दोज ब्रांचेस व्हिच वर मोर प्रोडक्टिव, व्हिच कुड ब्रिंग मोर बिजनेस एंड प्रॉफिट।
okay, yes sir.
That is the point.
More busy and more productive, they send extra staff.
So what happens is inputs will naturally shift to the more productive uses. This is the basic meaning in EP margin. Understood?
Yes, sir.
This is the basic point which I am trying to show you through that example. It is the natural thing to do. ठीक है? So this is basically, I'm just repeating that point, but essentially over a period of time, investments will only be made in activities that have the same marginal value. जिनका कम है उससे हट के it will come to those which are higher. और ultimately if there is a number of products, उन्हीं में आएगा जिसका कि बराबर हो। Because अगर किसी का भी कम है, then there is a thought कि चलो इसको shift कर देते हैं to the other one. Maybe I will earn more there. So that was that part. This is what actually I was a part of what I did yesterday. The second thing is capital budgeting decisions. Capital budgeting decisions is a word which is used, capital budgeting. What does it mean actually? Any thoughts? Lokesh, capital budgeting? Simple way of saying this.
Capital budgeting.
Where should I invest?
Invest, yes. What, how cannot explain, that.
Basically, it is where should I invest? Yeah, we can have a capital budgeting even for our personal selves. कि हमारे पास में भाई एक limited amount of capital है, उसका एक budget बनाओ.
How should it be invested in different places?
Yes. So there are different tools to decide. Remember हम लोगों का जो first lecture था, where we said that the basic objective of most enterprises is wealth maximization. और wealth maximization की definition में हम लोगों ने लिखा था कि if the decision results in an increase in the net present value, then the company or the CEO's decision can be considered to be good. मतलब कि in the long run, the amount of value created should be an increase over the investment. आपने अगर लगाया 100 रुपये, at the end of the day, you should end up with more than 100. After paying all your costs, after everything, you should end up with a profit. So one of the tools for understanding capital budgeting is NPV. So one of the tools that I have is NPV, net present value, which we discussed. So here we will just repeat this again, because today both of you seem to be in the right mood. तो उसके चलते भी थोड़ा easier होगा इसको repeat करना. हमारा position क्या है? You are an industrialist. आपका एक इंडस्ट्रियल यूनिट है और आप एक मशीन खरीदना चाहते हैं 10 लाख रुपए. नाउ फॉर यू वांट टू सी शुड आई मेक दिस डिसीजन और शुड आई. नाउ आप क्या देखते हैं कि अगर ये पैसे हम कहीं और लगाते, आई कुड हैव अर्न 10%. इसलिए मेरा अपॉर्चुनिटी कॉस्ट इज 10%. If I buy the machine and invest here, I am estimating that I can make 3 lakhs per year. If I make 3 lakhs per year, और दूसरा है कि मशीन का लाइफ जो है वो 5 साल है. So over a period of time, I will end up with 15 lakhs. But since the 15 lakhs is being received at different points of time, पहले साल में 3, दूसरे साल में 3, etc. Therefore, to understand or make my decision properly, I should use the present value concept. How will I do that? 10 lakh मैंने लगाया. मेरा opportunity cost is 10%. So I will discount each of these. And when I discount, I end up with the total amount of 1137,236. ये 1137,236 जो है, इसमें खासियत क्या है? This is in present value terms. In terms of today's monetary value, the 15 lakhs that I will get has a value of 11,37,000.
Today's.
In today's value. And in today's value, I am making an investment of 10,000.
10 lakhs.
10 lakhs. Therefore, I am ending up with a positive figure of 1,37,000. Therefore, this decision, if you take this, it is good for you because your wealth will increase by 1,37,000. So it makes the decision easier. So you wanted to know, should I invest in that machine? If I do this calculation and if my forecasting is correct, then I know that, yes, it is a good decision. So
because NPV is positive, we can proceed.
Because NPV is positive, NPV positive का एक और meaning है कि the return is higher than 10%. So I was getting 10%. When I discounted everything by 10%, I am still getting a positive figure. That means I am earning more than 10%. We will look at that point also. But logically, don't you think? At 10%, you would have earned 10 lakhs. Since you are earning more than 10 lakhs, it has to be more than 10%. So one thing you just keep in mind, as we go, we will reach this, what percentage was this? Now, instead of 3 lakhs for 5 years, suppose you are getting 1.5 lakhs over 10 years. उसमें भी 15 लाख ही आ रहा है. Understand? इसमें 3 लाख 5 years, मेरा opportunity cost अभी भी 10% है. ये 10 साल का कर लेते हैं. Now see what happens. वहां पर that 15 lakhs discounted came to 11,37,000. But here, what is it coming to? Less. It is coming to 9,21,000. And my NPV is negative. So, without the NPV, I could have thought कि देखो मेरा 10 साल का लाइफ है इस प्रोजेक्ट, उसका तो 5 साल का ही है. इसमें 1.5 लाख हर साल मुझे मिल जाएगा. But when I look at it in terms of present value, I see that अंत में have I actually made wealth? क्या हमने अपना wealth बढ़ाया? And the answer is no. I have reduced my wealth by 78,000. ये समझ में आया आप लोगों को?
Yes, sir.
Why is this happening? Any thoughts? क्यों ऐसा हो रहा है?
Time, sir.
Time, yes. Because you are receiving less over a period of a larger period of time.
Yes.
पहले वाले में तो 5 साल में सारे पैसे मिल गए. इसमें 5 साल एक्स्ट्रा लगा. And you notice the discounting factor here, I began with 1.10, I'm ending with 2.59. So the more time there is, the bigger will be the discounting factor. याद है ना, we kept multiplying.
Yes,
This
sir.
is
1 by
Yes,
1
sir.
power 10.
1.10 to the power 10. So
Yes,
the
sir.
discounting factor will keep increasing. And if the discounting factor keeps increasing, present value will keep decreasing. So that is, this NPV is wonderful because it explains this to you. Timing ka ek value. It is not 15 lakhs in both cases. Present value is something else. And this also means that the return from the investment is less than 10%. This we will see in the next thing. So it is useful to know the rate at which the cash inflows will be exactly equal to the investment. कोई एक रेट तो होगा ना जहां ये जीरो होगा. This will be 10 lakhs, ये 10 lakh, 10 minus 10 will be zero. There has to be some rate. अगर हम इसको लेके खिलवाड़ करते रहे इस 1.10 को, at some point I will reach a rate which will be exact, and that rate is known as the internal rate of return. We'll look a bit about that. In the case of NPV, should I invest or should I not invest? The rule is very simple. If NPV is positive, जो पहला केस था हमारा, you accept. That means you invest. If negative, जैसे ये केस है, reject कर दो, ये बेकार है करना. और अगर zero है, then it means the rate is as good as your opportunity cost. अगर उस पैसे को कहीं और लगाओगे तो भी इतना ही कमाओगे, इसमें लगाओगे तो भी same amount. It is up to you. If you can see some other benefits from it other than monetary, then maybe you can go for this. Okay. Now, ये present net present value को आप Excel में बहुत अच्छी तरह कर सकते हैं. So I have tried to create an Excel sheet. So these are the columns, these are the rows. Now, आप अगर एक आप लोग किसी के पास कंप्यूटर है वहां पर क्या?
लैपटॉप?
No, sir. No, sir.
Okay. Later on, लैपटॉप होगा ना आप लोग के पास?
ऑफिस में
I don't have, sir.
Okay, no problem.
ऑफिस में है, sir.
ऑफिस में है ना? कभी अगर ऑफिस में थोड़ा सा ये करके और टाइम निकाल के कोशिश करना ये करना. What you do is, आप यहाँ पे this is your 10 lakhs. I have just removed the 1000. ये 1000 माइनस, यहाँ माइनस साइन जरूर लगाना. अमाउंट इन्वेस्टेड 10 lakhs minus 1000. डिस्काउंट रेट इसमें हमने 11% लिया. टाइम पीरियड्स 1, 2, 3, 4, 5. 1 means after 1 year, after 2 years, after 3 years.
3, 4.
इनफ्लोज हमारे ये है. फॉर्मूला क्या एनपीवी का है? यहां पे आप लाओगे इक्वल टू, ये जो मैं यहां लिख रहा हूं इसको आप यहां लिख इस जगह, इक्वल्स एनपीवी ब्रैकेट ओपन B3 मतलब ये माइनस 10,000 कॉमा B4 डिस्काउंट रेट कॉमा, उसके बाद ये पूरा सेलेक्ट कर, ये यहां से लेके यहां तक इसको सेलेक्ट कर लो और ब्रैकेट क्लोज कर, प्रेस एंटर, यू विल गेट दिस इमीडिएट. तो वो जो हम मैनुअली जो पूरा करके देखे ना अभी थोड़ी देर पहले, दिस यू विल डू इन, ये लिखने में जो टाइम लगे ये करने में तो बस 1 मिनट भी नहीं लगे. यू जस्ट हैव टू टाइप दिस इक्वल टू एनपीवी ब्रैकेट ओपन, सेलेक्ट दिस कॉमा लगा के नेक्स्ट ये सेलेक्ट करो, फिर कॉमा लगा के ये पूरा रेंज सेलेक्ट कर लो, ये आ जाएगा सामने, आप देखते रहना आ जाएगा, वहां ब्रैकेट क्लोज करो, प्रेस एंटर, यू विल गेट दिस. नाउ इसमें मजेदार चीज क्या है कि यू कैन एक्चुअली कीप चेंजिंग दिस रेट. अगर आप इसको 11 के बजाय, एक चीज यहां याद रखना, आप डेसिमल लगा के लिखोगे, डोंट राइट 11, यू विल हैव टू राइट 0.11. 0.11, if you ask Excel to show it to you as a percentage, it will show it like this. But I have also typed 0.11, 0.11. Now, if you keep, changing that, you will reach a point where this will be 0. विदाउट एनी एफर्ट। फॉर्मूला तो है ही आपका ना,
Yes, sir.
इसको सिर्फ बदलते रहो। इसको जीरो करने के लिए क्या करेंगे? आई विल इंक्रीज दिस अ लिटिल, बिकॉज रिमेंबर प्रेजेंट वैल्यू गोज डाउन एज द डिस्काउंटिंग रेट गोज अप। इसको थोड़ा और बढ़ा देंगे तो हो सकता है ये जीरो पे आए। सो दिस इज द वे टू डू इट इन एक्सेल। ये तो आपके पास होगा ही, मैं भेज दूंगा आपको ये, तो यू विल बी एबल टू डू दिस योरसेल्फ एंड इट विल हेल्प यू in different ways. Now, take another example. So, here there is a managing director of a company. उसके पास में दो choices. He can either go for project 1 or he can go for project 2. दोनों positive. What the NPV is helping him to do is, ये जो पहला केस है, his opportunity cost is 7%. यहां पर भी 7% है, दोनों का इन्वेस्टमेंट भी बराबर है, सेम इन्वेस्टमेंट। इसका कैश फ्लो का पैटर्न थोड़ा डिफरेंट है इससे। इसका लाइफ 1 साल जाता है, नीचे वाले का, इसका लाइफ 1 साल कम। इसमें क्या होता है, पहला साल 6 करोड़, इसको 25 करोड़ मान लो। पहला साल 6 करोड़, दूसरा साल 7 करोड़, तीसरा 8, चौथा 8, पांचवा 8। तो टोटल में इसको जो है कितने पैसे मिल गए? 6 + 7 13 + 24 37 करोड़ रुपए इसको मिल जाएंगे। ये वाला में क्या होगा, फर्स्ट ईयर में 6, यहाँ पे फिर 3 साल चलेगा 7, और 6th ईयर में ही विल गेट 8। सो इसमें इसको 41 करोड़ मिल जाएगा टोटल, इसमें मिल रहा है 37। When you use NPV, you can see that this one is more profitable. It is a shorter period one, still it is more profitable because it is giving you a positive figure of 4.73. This is giving you a positive figure of 1.77. होता क्या है, by using this principle, I am able to take a decision based on wealth maximization principle. किससे मेरा वेल्थ ज्यादा बढ़ रहा है लोकेशन, 1 से या 2 से?
1 से।
हाँ, therefore I should choose. हाँ, therefore I should choose 1. This is now. Why do we discount at 7%? This is the opportunity cost. This is all clear to you now?
Yes, sir.
So it is a good measure of a project's profitability. जो एनपीवी है उससे हमें पता लगता है कि भाई प्रॉफिटेबल है या नहीं है। इसके एडवांटेजेस क्या है? टाइम वैल्यू, द टाइमिंग ऑफ द कैश इनफ्लो इज डिस्काउंट। नंबर 2, जितने कैश इनफ्लोज हैं, इट टेक्स इनटू अकाउंट ऑल द कैश इनफ्लोज ओवर द फुल लाइफ ऑफ द प्रोजेक्ट। ये आपको लग रहा होगा कि ये लिखने की क्या जरूरत थी, बट जैसे हम लोग आगे बढ़ेंगे, वी विल कम अक्रॉस सम मेथड्स, some other methods of understanding which are not as good as this one, which do not use all cash inflows. We'll see. Uske baad, since it yields a net present value, it is possible to add the net present values of different projects. Suppose करो कि आप 2-3 प्रोजेक्ट कर रहे हैं, हर एक का नेट प्रेजेंट वैल्यू अगर आप निकाल दोगे, you can add them up. भाई इसमें मेरा 4 करोड़ आएगा, इसमें 5 करोड़ आएगा, इसमें 6 करोड़ आएगा, तीनों करना है तो कितने टोटल हमारा वेल्थ बढ़ेगा? 5 + 4 9 + 7 16. This is the advantage. So this is what I am writing here कि एक प्रोजेक्ट है उसका एनपीवी 10 है, किसी और है उसका 5 है, I can add it up. It is possible for me to just add up the both, and I know and I can tell my board of directors, look, we can go for both these projects, we will end up with a extra wealth of 15 lakhs. So if the NPV is positive, the overall wealth of the company will increase. So this is the wealth maximization principle at work. अब इसकी कमियां क्या है? मेन कमी ये है, जो आप लोगों को भी लग रहा हो, कि it is very hard to forecast. भाई ये we have taken some figures कि भाई हम लगाएंगे 25 करोड़, हमें मिलेगा 6 करोड़ पहले साल में, 7 करोड़ दूसरे साल में। But the point is that if you are actually going to do this in real life, it is going to require a lot of effort. काफी कुछ आपको facts और details लाना पड़ेगा अपने होने वाले project के बारे में. You will have to sort of project costs. You will have to project sales. बहुत सारी चीजें आपको.
Look after rules and regulations, whether will be change in long run or not.
Yes.
Government support or environment, macro environment.
Exactly.
One clause also include, there is a COVID situation here, so there is a lockdown. So that's concept in affected, no?
Yes, then all your forecast is gone. See, if something
that
like
is an unusual risk that is not expected.
So that is a macro risk, na? Agar suppose there is a war with some country. Abhi imagine in Ukraine,
Ukraine Russia war.
NPV लेके बनाया था कोई चीज, वहां war हो गया, खत्म NPV, bomb गिर गया, factory उड़ गया, everything is over. So it will not work if there are big events like that which create trouble. So other thing is, it is very difficult to estimate the correct discount rate. ये जो opportunity cost हम लोग कह रहे हैं कि 10% होगा, 7% होगा. In practice, it is difficult. दूसरी बात है कि over a long period of time, मेरा opportunity cost भी तो change कर सकता है. So today I have a chance to invest at 10%. Maybe tomorrow it will not be 10%. Maybe it will only be 8, or maybe it will be 11. So, it is a little difficult to actually predict this. So let's look at that other point. Remember we said, वो zero कब हो जाता है? जो investment है हमारा और जो present value of all future inflows, these two, when is it equal? And we said that if we can find out the internal rate of return of the project, कि project का अपना rate of return क्या है? If we know this, ये पता लग जाएगा. See, so internal rate of return is the rate of interest or discount at which the sum of the future cash inflows is exactly equal to the amount invested. से हमने 10 लाख लगाया, 3 लाख हर साल आ रहा था. सपोज करो वो 5 साल में exactly 10 लाख, तब क्या discount rate? It tells an investor the actual rate of return that she will get over a specified period of time, and assuming a series of cash flows over this period. Isme, I have taken a slightly different example, just so that to give you this idea. Interest rates हमारे पास जो होता है, actually it is very much considering the concept of present value. So let's look at this. Bond आप लोग जानते हो ना क्या होता है?
Yes sir.
हार्दिक, जैसे कंपनी है, उसको पैसे चाहिए, एक तो तरीका होता है कि इक्विटी शेयर इशू कर, सबको हिस्से दे दो कंपनी में. The other concept can be issue of bond. So you are borrowing money from people. Yes, Lokesh, na? You are borrowing money and you are borrowing for a certain period of time. In this case, I am saying, let us suppose he borrows for 7 years. He is going to pay 15% every year to the bond holder. जो भी खरीदेगा उसको 15% हम हर साल देंगे. 7 साल के बाद उसको हम पैसे लौटा देंगे. This is bond. So the FD you take in a bank is also like a bond. If you say, give me annual interest, it will work on the same principle as a bond. Now, the present value of each rupee is 50 will be less over the years 1 to 7. पहला साल आपको 15 मिलेगा, 7वां साल में भी आपको 15 मिलेगा, लेकिन present value अगर हम देखेंगे तो ये कम होगा ना. And the 100 rupees you get in the 7th year, जो वापस आपको मिलेगा, उसका भी कम होगा. That will also be less than the 100 rupees you are giving today. Now, suppose we do a little exercise to find out what is the internal rate of return of this bond. कितने पैसे actually हम कमा रहे हैं? If I take it without considering anything, तो क्या होगा? 15 रुपये मिल रहा है हर साल. 7 years तक मिलेगा तो 105 रुपये. 100 रुपए वापस मिल जाएगा. I am getting 205. That means in 7 years, I put in 100 rupees, I got back interest of principal मिला के 205 रुपए वापस मिले. Actual rate of interest क्या? So let us look at this. इसको अगर आप करने की कोशिश करें, it is very difficult. Manually अगर आप चाहेंगे करना, it is not easy to do this. वो trial and error छोड़ के और कोई तरीका नहीं. But अगर हम Excel में इसको करते हैं, इसका बड़ा simple formula है. I will use the same type of formula which we used in net present value with one difference. In year 7, I am getting back the entire amount. 100 रुपए वापस मिलते. Remember in the examples we saw of NPV, वो 10 लाख रुपए जो हम लगाए थे शुरू में, वो तो वापस नहीं मिलता था ना. Obviously, that is invested in the infrastructure I created, जो machines थे, overheads थे, उसमें पैसे लगे. वो तो वापस मिलना नहीं है. We were looking only at the returns. But in the case of a bond, 100 रुपए हमने लगाए, हर साल 15 रुपए मिला. Year 7 में हमें 100 रुपया वापस मिल गया. इसका अगर हम internal rate of return निकालते हैं, what do you think it will come? क्या होगा? Any guesses? Lokesh? करना है guess? अच्छा, I will not torture you further. It is exactly 15%. This is the point I am making. तो अगर इसको ना हम 15% मान के सबको डिस्काउंट करने लगे, सपोज आई डिस्काउंट दिस बाय 1.15, इसको हम डिस्काउंट करते हैं बाय 1.15 स्क्वायर्ड, इसको बाय 1.15 क्यूब, 1.15 to the power 4 to the power 5 6 7 and 100 also to the discount by 1 to the power 7, I will get exactly 100 rupees. So yes, what this is telling you is that ये जो interest rate हम लोग pay करते हैं, this interest rate in the case of a bond or an FD is the internal rate of return of that bond or FD. इसमें क्या हो रहा है कि you are getting the exact rate. ऐसे इसका calculation होता है. So it will be the same as the coupon, 15%. ये जो 15% हमने rate लगाया था, bond के case में it is called a coupon.
Coupon rate, yes sir.
And this 15% is actually the internal rate of return. Which means कि अगर इन सब का हम present value निकाल लेते हैं, ये 205 रुपए का, it will be exactly equal to 100 rupees.
Sir,
मजेदार चीज है कि नहीं?
Sir, can I have a question? Hello?
Yes, Lokesh?
Sir, in general case, if somebody, if we give someone 1 lakh rupee of loan, hand loan, and we write a promissory note for at an interest rate of 24% or something for 3 years, in that case also same it will happen, sir.
The same thing will happen.
Okay.
It doesn't matter.
Yes. Okay.
It's the basic principle is the same, but the rule is that fellow should keep repaying you as per the promise.
Okay. Per year he should repay my interest.
He has to pay. If the timing of the inflow changes, then your present value will change.
Okay. It may reduce or increase. Yes.
It can increase or decrease. So that is the main point here. So I thought I'll just explain this to you because I personally found this very interesting when I saw it for the first time. That this 15% is actually worked out on this basis, internal rate of return. So that is one. Now continuing with this internal rate of return, now coming back to examples in the corporate sector. So I looked at this other point. Remember we said that if I invest 10 lakhs and I discount it by 1.1, then what am I getting? I am getting a positive NPV. वो 10 लाख बन गया था 11,37,000, 11.37. Remember when we did it? So
Yes,
I was asking you people the question, there has to be a point where it will be exact. The amount will be the same. So if I am getting these inflows over a period of, the second example, where we said that I am getting 1.5 lakhs for 10 years and I ended up with a negative NPV.
Yes, sir. 92,000.
It was 9,21,000.
Yes, sir.
Negative 78,000.
Negative 78,000. Yes, sir.
So the question I was asking you was, there has to be some rate at which it will be exactly 10. It won't be 921, it won't be 1137, it will be 10. This is the rate, 8.144. So if I take all these inflows and I discount this by 1.08144, add it all up, I will end up with 10 lakhs. And that is why this is known as the internal rate of return. And the formula in Excel is very simple. I'll show you in the next page. So remember one thing, unlike the bond in an industrial investment, you will not get this 10 lakhs back. ये तो वापस नहीं आएगा ना. So in the bond example, I was adding that principal in the last year. Here I don't have to do that. So you have to earn on year-to-year basis. And what is the principle? If the IRR is more than your cost of capital, you accept. आपको लोन मिल रहा है 7% पर, आपका IRR है 8%. You accept. But if your opportunity cost is 10% और आपका return है 8%, you should not accept. There is no point. Similarly, if it is the same, let's say कि मेरा opportunity cost भी 8.144 है, IRR भी 8.144 है. That means I can think of accepting it because जो दूसरा alternative है उससे भी ज्यादा नहीं मिल रहा है, दोनों बराबर है, तो चलो इसमें कर सकते हैं. Now we can look at this through another example also, which is slightly repetitive, but it helps. So the cost of investment is 10 lakhs. You can borrow funds from a bank. Rate of interest is 9%. Life of the project is 10 years. And what I have done here is I have actually discounted it. That exercise that we did in the previous slide, where I showed you, minus 10, 1.5, 1.5, 1.5 inflows. Here I have done it actually just to show you that even if you do it manually, you will end up with this. So if I see, look at the first discount rate here, 1.08144. This I keep squaring and basically multiplying this.
Increasing exponential.
And at the end of it, if I add all these figures up, very magically it comes exactly to 10 lakhs. So basically this internal rate of return is that return which equates the present value of all the cash flows. All these cash flows which I got, which was totaling to 15 lakhs, 1.5 into 10, the present value is 10 lakhs. It will be exactly equal to the amount which you had invested, 10 lakhs. So NPV will be 0. 10 minus 10, NPV is 0. If NPV is 0, the discount rate is your internal rate of return. Clear?
Okay.
Now, so if you want your cost of funds, if you want to do this project, you have to have a cost of funds less than 8.8%. नहीं तो फिर कोई फायदा है. Okay. This was, I think, the same slide again. We don't have to look at this. You can read it. थोड़ा सा I had just written a slightly different logic, but basic point we have already made. Now, think of a case where projects with difference in timing of cash flows. Cash flows दोनों, माने दो projects हम ले रहे हैं, दोनों में है timing अलग अलग है. So let's take this one, project A. हम उसमें 16,80,000 रुपए लगाते हैं. इसका क्या कैश फ्लो का टाइमिंग है? 1400 पहले साल में मिलेगा, 700 दूसरे साल में, 140 तीसरे साल में, और अगर हम 9% पर इसका एनपीवी निकालेंगे एक्सेल में, इट विल कम टू 301. अगर इसका हम इंटरनल रेट ऑफ रिटर्न सेम प्रिंसिपल पे निकालते हैं, आई एम गोइंग टू गेट 23%. Now, if I take this B, same investment 1680, लेकिन the pattern of inflows is different. इसमें पहले साल में मिलता है 140, दूसरे साल में मिलता है 840, तीसरे साल में 1510. I get a higher NPV, 321. But my internal rate of return वो कम हो जाता है. ये पहले वाले का क्या खासियत था कि large inflow 1400 is received during the early part of the project. ये पहले मिल गया था. इसको जब हम डिस्काउंट किए तो I discounted by 1.09. But when the second one, large inflow is received during the later part of the project. ये 1510 रुपए तीसरे साल में आता है. So I am now discounting this by a bigger figure, 1.1 to the power 3. So this is actually less. उसका result impact यहाँ पे तो पड़ रहा है. It is getting here at 17%, but it is still giving you a bigger NPV. Now the question, Lokesh, is which one will you agree with? The NPV or the IRR?
NPV is better, sir. Wealth maximization.
Excellent, excellent. Yeah. So obviously you should go with the NPV because you are getting something. वो rate लेके हम क्या करें?
Yes, sir. Total return is the important thing.
Return is the important thing. Why should I bother about rate? ठीक है भैया, rate कम, but I am getting more.
Yes.
So, like you said, you made it very simple. I have anticipated you here. If the answer is simple, if you consider the following question, what would you prefer? More wealth or higher rate of return? This is exactly what you were saying. So this is one situation. Now, when the larger cash flows are received towards the end of the project, the NPV will decline if the rate of discount is high. Now, isme actually there is an interesting thing. If you change this discount rate to make it higher, then the calculations will give you the reverse figure. I'll show you that also. So,
sir, I didn't get you. One, can you repeat the sentence?
Okay. What I'm saying is, यहाँ पे we were discounting with 9% opportunity cost, 1.09. When this discounting factor increases, I go more than 10. What will happen is the NPV will decline drastically. NPV वो काफी कम हो जाएगा, and it will become much less than the NPV of this project.
Okay.
And at a higher discount rate, IRR and NPV will tell you the same story. ये जो यहाँ पे difference आया ना, this is coming at this specific interest rate. Okay. If I change this interest rate, these two things will also change. See, this is another very interesting thing. And this is why this NPV IRR thing is very sensitive to your own assumptions. आपने अगर cost of opportunity cost को गलत समझ लिया, you will get a different answer altogether. In this case, if I make the opportunity cost 12%, suddenly you will find that project B is out, project A is in. इसका NPV बढ़ जाएगा, इसका कम हो जाएगा, because इसको हम discount करेंगे with a bigger figure. If the moment you increase the opportunity cost, इसका discount के चलते ये बहुत कम जाएगा, and at a certain point 15% it will become negative. So these are some things to remember. I think I have one slide on that. Just let me show you. But Acha, I didn't go for that. I showed you a different way. There is another way of satisfying ourselves that project B is superior to A. Project B का 321 था. Lokesh correctly said कि ये better है. एक और तरीका है. Suppose हमने incremental cash flow को देखा. The difference between the cash flows of B and A. ऐसे करके देखो. ये मेरा project A का cash flows है. ये मेरा project B का cash flows है. So investment is the same. So this minus B minus A is 0. यहाँ पे B minus A क्या है? Minus 1260. 140 minus 1400 minus 1260. Here it is 840 minus 700, 140. Here it is 1510 minus 140, it is 1370. इसको अगर आप discount करोगे, you will get a NPV of 20, which is also the difference of this. But I have calculated this using an NPV formula. And the IRR will come to 10%. So this will tell you that ये जो method मेरा है, this is something which is, well, it will convince you that this is a very good project. So the IRR on the incremental cash flow is 10%. This is more than your opportunity cost of 9%. आपका opportunity cost था 9. Remember, we are discounting at 9. You are getting IRR principal पर भी you will prefer to do this. And you are getting a better NPV in any case, 321. So this is another way of reconciling the difference between IRR and NPV. So to summarize, ये जो B वाला project है, इसमें आपको A के सारे benefit मिल जाते हैं. In addition to that, you are getting a rate which is higher than your required rate of return of 9%. और आपको ज़्यादा ये भी मिल रहा है. You are creating more wealth. You are getting it at a rate which is higher than your opportunity cost. So you can convince yourself that B is the best way to do. Okay. But yes, Lokesh.
Sir, can you tell how we will get 10%? Sir? Mathematical possible.
How you will be?
This NPV we can get by reducing A from B. But how can we get this 10? So 321 minus. How can we get the 10% IRR?
How can we get that? Use the IRR for. Achha, I didn't show you the IRR formula.
Sir,
Okay. Just let me go back. I'll show you. I'm actually surprised. It should have been here. Just a minute. Here, it is this one. I'll show it to you here. See, if I want to calculate IRR, you type all these. You type equal to IRR, open brackets. You select from minus 10 up to 150. That means from B1 to B11, if you select, close bracket, type enter, you will get your IRR.
Okay. So in case that a difference line, we have to do this part.
Okay. In case you get a different, what you said, Lokesh, was absolutely correct. If you are getting a difference, then that means that you should go by NPV. Don't bother about the IRR. If there is a conflict between IRR and NPV, in that case, it is better to go with NPV because NPV will actually tell you whether you are creating wealth or not. If you are creating wealth, there is no reason to look at the rate of return. That logic will hold.
Okay.
So this we did. Okay. So what are the merits? It considers time value of money. Cash flows are discounted. It considers all the cash flows over the life of the project. it generally gives the same acceptance rule as the NPV method. Generally, this is true. But like we said, there are cases when it will not be true. So whenever the IRR is greater than the opportunity cost of capital, the shareholder's health will be enhanced. Limitations: project may have multiple rates of return. It may not have a unique rate of return. See, in real life, maybe the rates of return will, over a certain period of time, will be something, and over another period of time may be different. Then this concept will not work so well. And then there is a problem with the IRR method when we compare projects with the same life, but different patterns of cash flows, what we saw. In such cases, the IRR method becomes unreliable, and it is better to rely on the NPV method. So that is a limitation. And where there is inconsistency between IRR and NPV methods, we can use the incremental approach to reconcile the difference. We can try to do that. It will give us a good idea. Now, we come to something very similar to NPV, which is called the Profitability Index. So we are looking at different ways of deciding whether to invest or not to invest. So the first was, if I have a positive NPV, I should invest. The second was, if I have an IRR which is higher than my opportunity cost, I should invest. Now I'm coming to the third tool, the Profitability Index, which is once again based on NPV. So it will be very similar to that, except it is expressing it as a ratio. So let us see how this works. So is the ratio of the present value of the cash inflows and
one second. Sir, don't mind. We are getting in the next topic. Previously, you told that when time increases for the discounting price, negative you will get, sir. For that, you told that I will tell you the reason why increasing in time reduces the return.
Yes. So that is the answer to that. Why that happens? So I was reading a lot about this today again. That is because of algebra. It is beyond my. So the author says that this is because of the maths of the thing. As it increases, these two begin to diverge. At some point it will diverge, then it again comes back. It converges again. What I will do, Lokesh, is I'll send you that table.
Okay.
You will see in that table and the graph along with the table. Had I known you people will take so much interest, I would have put it here today. But I was a little demoralized after yesterday.
No, so yesterday it was due to what?
I understand. I absolutely understand. But it becomes difficult to teach when there is no one there. It doesn't matter. That's okay. Now in Profitability Index, so here I said the same thing. I have taken 10 lakhs as an investment. These are my inflows: 250 in the first year, 280, 350, 3 lakhs and 250. I am using a 10% discount rate. So these are my discounting factors here: 1.10, 1.10 square, cubed to the power 4 to the power 5. These are my present values. 250 becomes 227 in the first year. By the time fifth year comes along, it is only worth 155. Total I am getting is 10,81,772. My investment was 10. So simple NPV is what? It is 81722. Now, what is my profitability index? Profitability index is basically this figure divided by the investment. So if I divide this, I will get this. Now that means if this is a positive figure, more than 1. Positive means if it is more than 1, then that means it is good. If it is less than 1, it is bad. If it is equal to 1, then it is like internal rate of return. You can accept also. So profitability index more than 1, you accept. less than 1, you reject. If it is exactly equal to 1, you can accept, because it is the same as any other option that you have. If you go for another option, the same thing will happen. So it recognizes the time value principle. These are the advantages. It is consistent with value maximization. The index can be used to compare projects. Any project with a positive NPV will also have a profitability index of greater than 1. I think that is very clear, because if I have a positive NPV here, then that means the present total of the present value of the cash flows is going to be higher than the investment. That is why this figure is positive. Therefore, when I divide the investment, or when I divide the present value by the investment, I am going to get a figure which is more than 1. This point is clear?
Yes.
Hardik? Hardik has taken a break. No problem. Let's continue with this. Okay, now we come to another method. So we have finished NPV, we have done IRR, we have touched profitability index. All these three were 3 tools in the hands of someone who wants to do this. These are basically the better methods. Now there are some chalu methods, what we can refer to as a very chalu method, in the sense that, see, when we are doing NPV or IRR, forecasting the inflows, getting the exact discount rate, that is a huge problem. It is not easy. So this payback period is a very old and simple concept. If I am investing a certain amount of money in a project, in how many years will I get my money back? Present value, I'm not concerned. I'm just saying I'm going to put 10 lakhs. In how many years will I get 10 lakhs back? And if it is a short period of time, I can actually think of doing this. So, as you can see, since we have already looked at better methods, this method will not be so good to you, but you will appreciate that it is very simple. If the project generates constant annual cash flows, then the payback period is calculated by dividing the cash outlay by the annual cash investment. We'll look at this. Suppose the cash inflow expected is 12,500 per year and a life of 7 years. So the project has a life of 7 years. I'm expecting to get 12,500 rupees per year. Initial investment was 50,000. So in how many years will I get 50,000 back? I'll take 50,000, divide by 12,500, 4 years. So I know that in 4 years, I'm going to get it back. So it's a relatively short investment. Now my decision is based on this one factor, that whatever I invest, I will get that amount back in 5 years. This is not concerned with wealth maximization and all. It is a simple back of the envelope calculation, or you just take a small calculator and do it, and you'll get your figure. Okay. Now, if the cash flows are uneven, suppose it is not like this, then you will have to do it manually. So it will be something like this. My cash outlay is 20,000. This is my investment. I am projecting that in year 1, I'll get 8,000, 7 in my year 2, 4 in year 3, and 3 in year 4. Now, if I look at it cumulatively, first year I got 8, second year I have got 8 plus 7, 15. Third year I have got 15 plus 4, 19. I need 20 to get back. So somewhere between the third and fourth year, I will get back my
total income. Okay.
So since I am getting 3,000 here, if I distribute it quarterly, if I say that not quarterly, but let's say in every 4 months I'm earning 1,000, then you can say that in this particular case, the payback period will be 3 years and 4 months. Because in 4 months, I'll get 1,000, 19,000. This is it. Now, what is the positive thing here? It is simple to use. So it may not be very effective, but it's simple. The risk of the project can be tackled by having a short payback period. So what we are thinking is, if the periods are very long, if the period is very long, then in that case, I have a problem, because the longer the period, the more the risk that I face. Like you people are saying, over a period of time, things can change. And extreme events can even happen. So if it is short, then the possibility of risk is also reduced. So if I use this payback method and I then focus only on those projects in which I will get my money back in a short period of time, then that is one way of reducing my risk. Because you had put 20,000, in 4 years back, you're getting 3 years, 4 months, you get back your 20,000. This money is released now. You can use this 20,000 for some other project. And whatever you earn on this project will be extra. So that is one way of thinking. Negative, of course, all of you can very easily think of the negative. The biggest negative is what?
Not considering rate of interest or anything.
Yes, and not considering timing.
Time value, as it written.
So you are not looking at opportunity cost, you are not looking at time value. So in that way, it is not a very good way of doing it. Now, does not consider timing, does not consider the inflows received after the payback period. See, this is another problem. There will be some inflows which will come after you have got your initial investment back. So if you want to understand how good a project is, you should be considering those inflows also. But that you are not doing. So basically what happens is, look at this. Suppose there is a project A. In the first year, year 0, I'm investing 4,000. First year, I don't get anything. Second year, I get 2. Second year, I get 2. So if I look at the payback method, in 2 years, I have got my money back. Project B, same investment. This time what happens is, I have got 2 in the first year, 2 in the second year, and nothing in the third year. Even here, the payback is 2. So if I am relying only on payback method, I am basically looking at the same figure, 2 and 2. Even though in this case, this 2 is coming in the third year. Now, if I look at NPV, I will have to get these, the present value of these. I'll have to assume a discount rate of 10%. Then I find that the NPV of project A is 806, whereas the project here is minus 530. So
sir, in first case, we are getting in third year, no, sir. Then how it is payback period 2 years, 3 years, no, sir. Year 1, we are getting nil. So we have to wait for the third year.
But the formula is that you will have to when there are uniform outlays, you will only take 4,000, take the uniform outlay and divide by 4. Divide this by the outlay, you will get 2.
Okay.
That logic which you are using, you are introducing something which is not there in payback. Payback is not considering timing, remember?
Yes, sir. Okay.
So when you say this,
sir, it is not considering the time value, but it is considering timing, no, sir. It is considering of in how many years we are recovering the investment amount. So I am recovering this outlay in 3 years, not in 3 years.
3 years. But as per the formula of payback, you will have to basically divide 4 by 2,000 because it is a uniform outlay and the formula says divide. It's a mechanical thing, Lokesh.
Okay.
The thing is that since we understand that it is not logical, we say that this will not be such a good method. Now, so if you take this, we see that only project A can be accepted. Payback method gave wrong results because it failed to consider the present value and the inflows received after the payback period. So this is one problem here. Now, let us look at another example. When we don't take into account timing, so we have another issue here. we have two sets of inflows here. In this, the first investment is the same, 5,000, 322, and this is 232. And what we find is that the NPV here is 881 and the NPV here is 798, mainly because in this case, the 3 came first in the first year, and here the 3 came in the second year. So because of that, the second project had a better NPV. But in terms of payback, the amount of time is 2 years for both. So I'm recovering 5,000 in 2 years. Here also I'm recovering 5,000 in 2 years. But I am ending up with a better NPV for the first one, mainly because of timing. I think, Lokesh, it is better for us to go with this example. The second one. This one is a bit childish.
Yes, sir.
This becomes a little childish, but it is taken from a top management book. So I cannot really, begin to criticize this too much. What the author is saying is that you have to follow the basic logic of the formula of payback. And the formula is take the initial investment, divide by if the cash flows are even, you divide by that. That is his logic.
If not, sir, if the cash flows are uneven? If cash flows are uneven, sir?
In this case, it is uneven. No?
Yes, sir. Okay.
Here it is even. Here it is even.
Sir, so my small vote is, in this second case, C and D case, it is uneven, sir. But in every year, we are getting cash flow. As in the first case, if we do not get cash, any 1 rupee, any outflow, any inflow in year 1, so it will extend, no, sir. Time will extend. Payback period will extend, no, sir.
Payback will extend because you are considering timing. Okay. But if you were to do it in the conventional way of thinking, the payback, you will only ask yourself one question. How much did I get in total? I got 2,000 per year. Okay. It is not perfect. See, the point you are making is absolutely correct. Yes. But this is the way it is. The example they give in the book is this. What I suggest is, let us look at this one. Let us look at this. I think this makes the point, it's clearer here. Because I'll also note this for the future, because this actually is confusing.
Yes, sir.
This is confusing things for no good reason. So, okay. Now, in this particular case, it is very clear that if we compare payback and NPV, NPV is able to give you a better picture of what you should do with this. So in this case, NPV is considering timing, payback is not considering timing, and NPV is also considering this. See, payback will not consider any inflow, which is made in because they have already recovered the money here.
Okay, yes, sir.
They have recovered the money here. So that is one point. So as per payback method, both project C and D are desirable. But when we consider the NPV, we note that project C is better as it has a higher NPV. Thus, payback is not a measure of profitability. That is one problem with payback. Now, so suppose we correct this problem and we start with a discounted payback. Suppose we go for a discounted payback method. Then what happens? Now, in the discounted payback method, you will discount the cash flows. So, project P, the investment is 4,000 and the cash flows are like this: 3,000, 1,000, 1,000, 1,000. Simple payback method will give you 2 years. So, year 1 and 2, you add these two, you are getting 4,000. So, in 2 years, you are getting it back. Now, what is the present value system? What will you get? This 3,000 discounted by 10% will be 2,727. 1,000 is 826 and so on. And at the end of it all, you will end up with a amount of 2.6 years.
Increase in time.
Naturally, this will increase because the values have gone down. I think I made a mistake here. This figure is wrong.
Yes.
This is a mistake. I'll correct it. So you'll get 2.6 years. And if you look at NPV, you'll get 987.
Okay.
Now, if I take project Q, I get 0, 4, 1, 2. See, even here you will notice that the simple method, the author writes 2 years.
Sir, this is what I asked, sir, in the last yellow chart also.
So because according to the author, the moment it is received, if it is received in 2 years, irrespective of timing, you have to think of it like this.
Okay.
In the payback method, you are not supposed to consider time. The cash flows of 2 years, no matter whether it is years 1 and 2 or whether it is 2 and 3, the cash flows of 2 years are enough to get you back your money. Therefore, he will say that the simple payback method is 2 years. We may not agree with this, but this is the conventional way of calculating. These 2 years are giving you in year 2, you are getting 4,000. So in this case, so it's even clearer. See,
yes, sir. Yes.
In 2 years, you are getting 4. Then the author has confused us. Absolutely.
Yes,
we'll have to go back and look at the yellow one again.
That is I'm asking, sir. Yellow one, they did it wrong, I think.
It is wrong. It is wrong.
Yes, sir.
You're right.
This
I
is
think
correct.
now to correct the yellow one, what we should do is, we should do this one.
Yes, sir. This we can replace there.
Let us correct it now. I think it's a good idea. So what we can do is, we can go here and...
here payback period, we can write 3 years, sir. In that way, their difference can be understood for us, sir.
What we can do is, if we write 4,000 here.
Okay, sir. So payback period will be the same.
Then it will be same. Year 2,
yes,
year 2.
Okay, sir.
It will be the same.
Okay.
I think it's a mistake. It's a genuine mistake. Because only then will the NPV higher.
Yes, sir.
Okay.
Now NPV also changes, no, sir?
I have a feeling that if I use 2 and 2, this NPV will not be 806. Okay, I'll check this up and send you a WhatsApp message today.
Okay, sir. No problem.
Otherwise, if we do it now, it will take some time.
No problem, sir.
So we are already 15-20 minutes left. So if you see the results, the problems with the payback and discounted method come to the fore. So here what you see is, if you now discount these, what are you getting?
Discounted payback.
Discounted payback. So discounted payback here, you are getting 2.9 years. Here you are getting 2.6. So if you go by this, you will go for project P. You will reject this because this has a higher payback period. But if you go by NPV, you will go for this project Q, because the NPV here is higher. Why is the payback period higher in this case? Because
in year 1 there is no receipt.
Yes, because year 1 there is nothing. So even the discounted payback is not taking into account fully the timing. See, that is why you are ending up with something which shows that project Q is better. Whereas project P is shown project P is worse than project P. Project Q is worse than P. So what the discounted payback is telling you, Lokesh, is that basically, even in discounted payback, the timing is not fully taken care. But if we look at NPV, we are getting something which is, let's say, much better. So if I'm calculating this correctly, this opportunity cost thing, and these inflows are correct, then I will get a fairly good NPV. It will be quite reliable in that case. So as per simple payback method, both projects are equally desirable. As per the discounted payback method, project P is better because the payback period is less. This is the problem. But as per the NPV method, project Q is better because the NPV is the best for this project. So you can see, in this one chart, what the problems are with simple payback, discounted payback, and how NPV ultimately remains the best one. Okay. So this is one. Now there is one very simple one. For you, Lokesh, this will be child's play because this is using accounting. This is basically using an accounting metric to do it. So this is the accounting rate of return. So basically what is happening here is, this is also known as the return on investment method, uses accounting information as shown in the financial statements to measure the profitability of an investment. So you will be projecting your financial statements, and based on the projections in your financial statements, you will arrive at your profit after tax. And in the formula, that profit after tax is being referred to as average income. But as we will see, it is not straight profit after tax because it is actually, it's like saying profit before interest but after tax. So they don't want to take the interest part here. And the average investment is the basically after depreciation. So if they're taking these two, so example, assume that the investment made in the project is 40,000. After depreciation and everything, it comes to 20,000. Average earnings, this PAT is 3,200. And this doesn't include interest. So 3,200 divided by 20,000 multiplied by 100, I am getting a return of 16%. So basically,
in this case, this investment is fixed assets. No?
Investment, see, I have the whole chart here. You can look at this. So look at this here. Earnings before depreciation, interest and taxes is 10,000 in year one. These are the projections. Then depreciation is charged here like this, a straight line method. So they are doing this here. Earnings before interest and taxes is coming in this way. Average is this, 6,400. Taxes at 50%, it comes to 3,200. So this is the basis of average income of 3,200. So earnings before interest and taxes. It is taking EBIT actually. Okay, it is not taking PAT, it is taking EBIT. Then from EBIT, it is reducing the tax. So it's like saying before interest, after taxes.
Yes, okay.
So it's normally you don't do it like this, but they are probably doing this now because they are using the interest to discount this at some stage. So the book value of the investment, the beginning was 40,000, ending is 32,000. Ultimately, if you follow this, it is coming to 20,000. So this they are saying is the
okay. In
40,000
average
minus 8,000 is 32. 32 minus 8 is 24. 24 minus 8 is 16. 16 minus 8 is 8. 8 minus 8 is 0. So basically, what they are doing is they are taking this part here. This is like after depreciation. Is that correct? How exactly is it coming? Achha, they are taking the beginning and ending average for each year.
Yes,
beginning of the year was 40.
Yes, sir.
End of the year was 32. Average is 36.
Yes, sir. Opening plus closing by 2.
By 2. So opening plus closing by 2. By that logic, ultimately, if you add all these up and you divide by 5, you are getting. So this is totaling to 1 lakh, I think. 36 plus 64, 84, 84. Yes, 84, 88 plus 12, 1 lakh. So
1 lakh divided by 5 years, 20,000.
Is 20,000. So that is the basis for this 20,000. This is the basis for 3,200. You are ultimately getting 16%.
So okay, that 3,200 is EBIT, not PAT.
It is EBIT 1 minus T. So,
okay.
because the tax is here now. They have reduced.
Sir, before paying taxes, we will pay the interest, sir.
So what they are saying is add back the interest.
Okay, sir. Add back the interest. Okay.
Add back the interest. So according to this particular formula, they are saying don't consider the interest here. Just take the value of the amount invested. There is a cost, okay, but right now we just want to understand. Actually, this concept of not taking the interest is there in a number of formulas. Because what they basically want to know is, if I invest this much, what is the return I will get? So at this point of time, they are looking for pure return. They are not considering the interest at this point. What they will say is, if this interest is higher than the rate of interest, which the cost, then you are better off. You understand? Without interest, you are earning 16%.
Yes.
And let's say the interest rate was 10.
Okay. Then the difference is 6%.
So you are doing better than the interest rate. It is just like internal rate of return. Internal rate of return also, what are we saying? We are saying that the IRR, if it is higher than opportunity cost, then I am good. Then I should accept the project. Something similar is happening here. So here also what I am saying is that if I can get this without considering interest, and I know that this is my return, if I now look at my cost, I have a basis for understanding which is better. So between different projects, if I can look at the ARR, the higher the ARR, the better it is for me, even from a wealth creation perspective. Because I'll be making more money, so hopefully my present values will also be high, and I will end up with something good. But remember, in this particular case, ARR, there is no discounting. So that issue is there. So we reach the end of that particular chapter in which we were talking about so should we begin cost of capital or should we just quickly revise everything?
I'm okay to start, sir.
Okay, fine. Then in that case, let's start with cost of capital. So I have just put this balance sheet here. This is not for you, Lokesh. You see too many of these things in office. The basic point I was trying to make was that I was just trying to focus on this. This is the capital structure of this company, where the equity capital is 500, the long-term borrowings are 100, and we are looking at the cost aspects. What is the cost of this? What is the cost of this? So basically how I want to take this forward is, first we understand the cost part. Once we are clear about the cost of these things, then we look at capital structure. And then we begin to see how the capital structure is different for different types of companies. So that way we will, so those people who have very little idea about, who have not actually interacted with balance sheets and with financial statements, for them it will be a good way of understanding how capital is obtained by a company and how exactly that capital is, what exactly is the cost of that capital. For example, many people from non-finance backgrounds quite often feel that equity capital is free. So because the payment of dividend is optional. So since it is optional, they don't realize that you cannot not pay dividends without a good reason. So maybe it is you have the option of not paying dividend, but the not paying dividend is not a privilege that you have. That can only be done if you have a better reason for not paying, and there is a better way of utilizing the money which you would have paid as dividend. So it is good to look at costs of equity also. So, okay, these are Just a conventional balance sheet here, nothing great. Now, if you come to the capital structure part, so basically capital structure is the proportion of equity and debt in the total capital of the company. And from the company point of view, these are the only two ways of getting money. It will get it either through equity, in which case it will give shares of the company to the investor, or it will borrow the money. Now, it can borrow either in the form of bonds from the public at large, or it can borrow in bulk from an institution, from any lender, which is giving it the money. Now, this proportion between the equity and debt, who decides this? This is something which is ultimately decided by the board. What do we want? Do we want to go for equity, high proportion of equity, low proportion of debt, or reverse? And of course, these are going to depend to a large extent on the type of investments which the company will make. Because remember, the problem with debt will always be that if you borrow, then you are expected to repay on time.
Fixed time and fixed return.
And if you don't repay on time, you can pay a very high cost. There's a reputational cost. Worst case scenario, it can lead to bankruptcy. All sorts of things can happen.
Penalty, penal interest.
Initially penalties, if you still can't pay, ultimately it will go to, they will take you to the bankruptcy court.
Okay, okay.
I am sitting in a place where this has happened in Lavasa.
Yes, okay.
So here, Hindustan Construction Corporation and other people, they had started this, and they took loans from so many banks. Later on, the project ran into trouble. So what happened was, the bankers, all the creditors, took the whole project to the National Company Law Tribunal, using the provisions of the Indian Bankruptcy Code. And after that, this whole place was auctioned. Okay. So now the owner of this Lavasa is someone else. It's a different company called Darwin. The original company, which was promoted by the Hindustan Construction Corporation, that is no longer the owner. It has a small share, but no longer the owner. So the problem with debt is that you have to be very sure about the inflow pattern, because you will have to repay. So if you don't get your forecasts of inflows correct, then you can face a big problem. So the board has to ultimately decide right in the beginning which it prefers. And so that's one point. The other point which I was making to you, for you this is childish, equity capital is not free. But I'm sure that people listening to it for the first time, for them it is good to know that there is always a cost. So whether it is equity or debt, there will be a cost. All shareholders want a good return. And since they are taking a higher risk, they will also want a higher return. So as far as the difference between debt and equity is concerned, the equity guy is taking a huge risk because there is no compulsion on the part of the company to return his money. Okay. So his only way of quitting is by selling it to someone else. And when he sells to someone else, the market decides the price. So depending on demand and supply, he may gain, he may lose. So there is no guarantee for the equity guy, for the equity shareholder, to get back his money. And the company certainly is not guaranteeing. The company is not guaranteeing it at all. All the company is saying is that if I fail, and if tomorrow I go into liquidation, then in that case, what will happen? I will basically, my assets will be sold. And depending on how much money is generated from the sale of assets, you will
be cleared outside liabilities. After remaining will be proportionately shared among equity and preference shareholders.
And yes, so only then will you get your money back. If nothing is left, you're gone. There will be nothing at all. For example, in the case of Lavasa, nothing was left. So equity shareholders lost out completely. So there is a huge risk that an equity person has. So if debt is normally priced at say 8%, 9%, 10% like that, equity has to have something much, much higher. Because they are taking a huge risk. As far as the debt holder is concerned, they have two advantages. There is a payback period. They'll be getting back their money in a certain amount of time. Number two, there is a fixed rate of interest that they are getting. Number three, there is a charge on the assets of the company. That means, so there will be a mortgage, something will be there, which they can use to later on, which they can sell to get back their money. So in the case, even in the case of bonds, there are assets of the company which are earmarked specifically for the bonds. And there is a bond trustee who actually looks after the interests of the bondholders. And in the event of the company failing to pay the bondholders, those assets can be appropriated by this bond trustee, and he can actually sell those assets and use the proceeds of those assets to satisfy the claims of the bondholder. So there are many ways in which the risk of the bondholder is reduced, but or the anybody who's given debt, but anybody who's given credit, sorry. But as far as equity is concerned, the ultimate is that the equity holder, shareholder, loses all the money that is there. So it's a tricky thing, and it's therefore there has to be adequate compensation for somebody who invests. The other thing is it's a little easier to understand the amount, the cost of debt, because normally it is stated. You take a loan from a banker gives you a rate of interest 12%. If you float a bond, in that case, you will declare that I want to give this coupon, 12%, 5%, 8%, whatever is it, you will basically declare it. So that will again make it easy. If you are taking, in the case of, let's say you're taking from equity shares, if you're raising, it becomes a more complicated sort of thing to understand. What is the amount that the shareholder actually expects? And it becomes even more complicated because there is no hard and fast rule about it. So I'll show you some methods which are there in finance to calculate this, which even when you read it, you will see it's not exactly the best way of doing it, but the theory has gone for those methods. So I'm just making this point again. Since the risk to the shareholder is much higher, if the company does not do well, the shareholder gets no dividends. If the company fails, the shareholder loses his investment. So because of that, he should get less. So for the sake of convenience, I have taken here a return of 20% for the equity shareholder. Now, this 20% can be obtained in two ways. One is, of course, and as far as the shareholder is concerned, for the company, it is a cost. In practical terms, if you look at this, Lokesh, whenever we buy shares and if things are going well, we are mainly able to make a return when we sell it. So, yes, so 20%, I think, is a reasonable sort of a, what shall I say, a remuneration to demand for someone who's taking so much risk. Because just as I can sell it at a profit, I can very likely, in today's scenario, I'll probably be selling it at a loss.
It's so there are now rising market.
So I think we'll have to stop here today.
Okay.
We are past 8 o'clock. In case, Lokesh, you next Saturday, you again have trouble coming in, okay, please send me a message.
Okay, I will reply in group.
Reply in the group. Just put something there on Friday, whether you will be able to attend on Saturday or not. Sunday, I'm assuming you will attend. If there is a problem with Saturday, just let me know. So I will structure my own lecture accordingly. Okay.
Sir, the problem is we don't know when we will get out of the office, as this is IT return season. So on one day we will have heavy work. On one day we will be very much free, sir. So on Saturday only I can say whether I can.
Okay, fair enough.
Okay.
Let me just,
don't
even if
mind,
you
sir.
tell me 1 hour before, even that
Okay,
is
sir.
good. Okay, by 5
Okay.
o'clock also, if you let me know,
Sir.
at least I'll have an idea. Na? Otherwise, what happens is I'm looking forward to seeing all of you. Then suddenly I find nobody has come.
Oh, yes, sir. Sorry for the inconvenience.
No, sorry. It's okay. It's okay. It's no problem.
Okay.
The other thing I'm
once,
saying, Lokesh, is now, if at any point you can all agree to a different time,
okay.
then you tell me. Suppose
Oh, no,
instead
sir.
of
This is the better time actually.
this is the better time.
Yes,
So
sir.
if 7 to 9 makes more sense, then let me know.
Okay. I think Mr. Neeraj can put a message in the group whether everyone is comfortable with that time, sir.
No, if you have this idea and you send it in the group, sir, can you change the time till 7? Then I'll ask everyone.
Okay, sir.
Okay. So if there is a consensus, then we can do it. If there is no consensus, we'll stick with 6 to 8. Sometimes this can be done. I don't see a problem with this.
Okay. So okay, you can shift the class if we inform 1 day before, sir.
I think I can shift. So the only thing is, see, on Saturday, like last Saturday, what I found was that Harsh was still in the bank, Hardik was still in his office, you were still in your office, and Anjali came, and then for some reason she had to leave. So all 4 of you were occupied. Now, if by shifting the class from 7 to 9, if that works better, then I don't mind.
Okay.
For me, teaching from 6 to 8 or 7 to 9 makes no difference.
Okay.
The same. So if you think that is the right way to go ahead, you put a suggestion in the group and we will see.
Okay.
Okay.
Okay, sir. Sir, one small thing. You told that you will share the chat, sir, for algebraic problems. You told me.
Which one?
In NPV, in this NPV concept, increasing time flow of
I'll share it. I'll share it.
Okay. No, sir, can I ask something out of this class as a personal suggestion? Sir, you are a retired banker. As part of our work, we have to go for concurrent audits also, sir. Okay. Concurrent audits of the banks. As present, we are dealing, and presently I am engaged with the Union Bank of India concurrent audit. Do you suggest any personal suggestion? Look into this aspect or something. For knowledge sake, sir. We are not going to find out such big things for knowledge sake. Anything.
What are you saying exactly? Should you go for other banks?
No, sir. Actually, we are going to, as part of our work, we go to concurrent audits also, sir.
Okay.
Now, at present, we are dealing with Union Bank of India. Okay. I am some of suggestions we will get from our office. As a retired banker, I am just asking you from which point we can check something like that.
Okay.
I mean,
okay.
What are the
I'll send you some.
Okay.
I will send you. You have a personal WhatsApp also, no? Message. Your number is there.
Yes, sir. I will text you on personally, sir.
You send me on my you know my number. It's already there.
Yes, sir.
Let me just send me a hi, hello, anything along with your request, and I will. I'll send you some of the things which you should definitely check. So you are basically going to be looking at the credit portfolio.
I see.
Your main concern is with the credit portfolio. So in my opinion, you probably already have this concept of looking at high value accounts.
Yes, sir. High value accounts like
high value accounts. So I think now there are 2 things which you should basically be focusing on. Look at the asset classification.
Okay.
Has the account been properly classified as standard, substandard, doubtful, loss?
Okay.
Because depending on the classification, the provision changes.
Okay.
So that is my first advice. Look at that. The second advice is that in all the bigger units, you have to be very sure that the unit is functional.
Okay.
You look at that aspect.
Physical inspection is a better thing, I think.
Yes. Okay, so what we'll do is we'll stop at this point and we'll take this discussion on a personal basis. So I'll send you my EA, and then later on, if you find that you want to discuss it further, you call me and we'll do it.
Okay, thank you, sir, so much.
Okay, good night.